All right, guys, so today we're going to be doing a step-by-step strategic checklist for my trading strategy, pretty much, to simplify it into simpler terms. And let's get right into it, guys. Step number one, guys, enter your trading day with a clear mind. When I say enter your trading day with a clear mind, I don't mean just show up to your desk and just be like, all right, let's clear this out. No, I mean you can't be up too late at night. You have to get full 7-8 hours of sleep, however many hours you get. Make sure you guys are not on your phone too late, doom scrolling. I know that's very, very big nowadays. I personally don't scroll at all. I think it fries your brain and it fries your dopamine receptors and stuff like that, but that's a little deep. So just make sure you guys are doing things throughout the day to like clear your mind and stuff like that. Whether you meditate or just take 5 or 10 minutes, don't do anything at all. Just sit in the room, quiet, stare at the wall. Whatever you guys got to do, clear your mind, because trading is not just trading candlesticks and money. It has to do a lot about your mental stability. All right. Now, getting into step 2. You have to identify all key liquidity points, mainly overnight lows and highs. This is pretty much how I start off my morning. So I get right over to my desk and identify those key liquidity points. I'm going to show you guys an example very quickly. So not to get too much into it, you guys, this is from a previous week. You guys literally, this is an indicator that shows the Asia high and low, right? So as you can see, these are the highs and this is the low over here that was never touched until here. So pretty much you're going to log on the markets, whatever you log on, 8:30, 9 o'clock. And just mark out your liquidity points, guys. Mark out the key liquidity points, some liquidity points that you want to see hit. So as you can see up here, this key buy side liquidity point that ended up being hit. And then you also have this internal one here for smaller take profits. And then you can also mark out like this lower one over here. Just make sure you guys are marking out the externals, all right? Because as you can see, eventually this low gets hit, right? But that's a part of a liquidity video that I'll eventually get onto. Anyways, moving back onto the step 3, guys. You have to allow the first 20 minutes of New York Open to manipulate, guys. I do take 9:30 trades sometimes, but it is nowhere near the size that I'm sizing on the 10 a.m. position. So if I see a very, very, very good setup at 9:30, like a breakthrough or a continuation trade, I will size on that according to being stopped at 1 to 2 times, because 9:30 price is very volatile on NASDAQ, as you guys know. And as you guys can see right here, this is the 5-minute candle. But you guys can see this 9:30 candle all the way up to the 9:50 candle, which is the first 20 minutes of market open. You guys can see for yourself, to be honest. I don't have to do too much explaining. You have a bunch of manipulation, up, down, up, down, up, down. When you could just skip all of this and then jump on to the 9:50 to 10 a.m. to 9:50 to 9:55 and then back to, well, basically 9:50 to the 10 a.m. candle, right? Because this pretty much just distributes over to the 4-hour open, and then you can obviously look for execution there, right? So moving on to step 4 now. So step 3, hopefully is very simple and easy. Just you guys really need to skip over that first 20 minutes of market open. Step 4, guys, you need to wait for a key liquidity sweep and or SMT, right? So as you guys can see here, we do have like a SMT here. I don't have the ES chart set up right here, but I did have it prior, but it got deleted for some reason, so I'm not going to go back. We did have SMT here, right? Now SMT is basically just divergence. I'm not going to explain that. That's for another video. This is pretty much just a strategic video. So basically you have to wait. You really do have to wait for some sort of liquidity to sweep. All right. So if you guys don't trade by SMT, you can just wait for a sweep, and then a sweep in this occasion or whatever you want to call it. This scenario would have been the sweep of this high over here, right, guys? So as you can see, you have the 630 high here that gets taken out right there. And then obviously you can see we continue higher, right? So this is your main sweep here, guys, right? We'll label this for the next step, all right? So this is your main sweep that you're waiting for after. So this main sweep usually comes within like 9, I don't want to set exact times, but usually 9:45 to 10 a.m. you get that main sweep. Then is when you can look to position, all right? So you really don't want to take position unless you get that main sweep of liquidity. Now, step 5, look for market structure. Look for a market structure shift or continuation. In this scenario, we don't have much market structure shift because, as you can see, we're pretty much moving sideways this entire time. If you look at the longer term, we're a little more bullish, but you don't really want to look at this longer term market structure when you're trying to narrow down onto like the 1-hour reversal or continuation, right? So the minor market structure shift here that you guys can mark out is pretty much just this high here. We'll get rid of this here. Move this down a bit. Right here, you guys have a minor market structure shift here. What is a market structure shift? Just to keep it very simple, basically when you wick here and then price eventually just breaks that, and then it usually comes back down to retest into that, all right? So by the way, guys, this line coming down is just a 10 a.m. candle, so we'll get rid of that for now. Moving on to step number 6. Number 5, all you got to do is just look for that market structure shift and then or a continuation. Continuation, I did not review that, but continuation, this is also a continuation here, but they're pretty similar, guys. Now, moving on to step number 6, you guys need to look for a discounted PD array / inefficiency. PD arrays are pretty much just order blocks and stuff like that. They also fall under the, well, inefficiencies, PD arrays, I look at them pretty similarly. Inefficiencies, I pretty much just mean fair value gaps, but inefficiencies sounds more professional. I don't know what the hell you want to call it. Anyways, so after this 10 a.m. or after this 9:50 to 10 a.m. Little distribution kind of move, you have the market structure shift there, and then you're looking for the most discounted PD array. Now, as you guys can see, price did not come into the discounted PD array. What do I claim as a discounted PD array? You could just grab your fibs and just draw that out. As you can see from this low down here, which is pretty much the lowest low, you could drag down here, same thing. It's only a point difference. From this low to this high, which is pretty much the pump of the morning, you can see the midpoint is right here at 25,640, right? Now, ideally, you would want this PD array / inefficiency / fair value gap to get tapped into, but obviously we did not tap into that. So what you guys want to do, and I can't set an exact entry point here. This is more so just market feel. I know it sounds niche. I know it's not what you want to hear, but you need market experience in order to feel this, right? So once you see, well, I'm on the 5-minute candle. Once you see this here, and you can see we're setting up to not get into this bottom fair value gap, obviously you would long it up here. But ideally, you definitely want this down here. Why? Because that would match with your risk to reward. It's just more rational down here. Now I'm going to get into that in the next step, if I'm not mistaken. Step number 7, make sure you are comfortable with your risk parameters. Yes. So if you guys are looking for this fair value gap down here instead of this fair value gap due to the fact that this is more discounted, obviously that fits within anybody's risk to reward ratio way better than what you would do here. Because if you were to long up here, you guys always have to look, where am I going to put my stop loss prior to executing position? If you're executing your position prior to identifying your stop loss, then you're doing it all wrong. You need to identify your stop loss, guys. So what I like to do is pretty much enter the position with the mindset of, okay, I already lost. Let's say my stop loss is set at $500. Okay, I already lost this $500 from my account. I'm totally comfortable with losing $500 due to the fact that if it works out in the profit side, then it would yield me $1,500, $2,000, whatever the take profit is, right? So make sure you guys are identifying your stop loss first prior to execution. So if you guys were to take this one, which is not as discounted as the bottom one for longs, then obviously you don't have much room to put, well, you don't have a clear vision of where you're putting your stops here. Me personally, if I was to take this long here, I'd just put my stops pretty much at the bottom of this fair value gap. But then again, that does risk this order block getting tapped into. So I don't know if I would take this position. I'd probably take it very, very light size. And then if we drip down into here and get stopped out, then I'm totally fine with that. Then I'll just re-enter on the continuation back up. So make sure you guys know your risk parameters. That's very key. And make sure you know that, well, make sure you're comfortable with the fact that if you get stopped out once and you want to go on for that second position, make sure that first stop out does not bother you at all, to where the second position is going to have a mental stress on you. You understand, from the first position? So moving on to step number 8, execute your desired position with no hesitation. So obviously once price gets into your, let's say you have this tool set up prior, make sure you guys are executing that position with ease. Obviously, you guys do want to look for a bounce or a rejection, whatever, if you're long or short. Make sure you guys are waiting for that confirmation. If you don't wait for confirmation, some people do that. I personally don't. I like to wait for some sort of confirmation. I don't like to just predict that we're going to bounce or reject off of there. So just make sure you guys are waiting for that confirmation if you do want a little more confluence. And then based off of that, you should be able to just execute the position with no hesitation. If you guys have hesitation, there's this red X at the top right. And if you press X, it just closes the application. I don't know if you guys know how to do that, but if you just press X, it closes the application. So if you're hesitant, go ahead and press that X and then come back the next day. A little more clear. And step number 9, stay patient for your stop loss to get hit or take profit. And then journal that, study that, and then log off. So a lot of people would take position here, see a pump here, see a little flat line out here. Let's say we had take profit here, right? As you can see, this candle did not take out that full liquidity sweep up here at 766. It only reached the 764. Many people would just exit the position. I personally let the position run completely. Why? Because it works more over longevity, right? So you don't want to just cut the position just because you're profitable, right? Or just because you're down X amount of dollars. That's the worst thing you can do. I'd say let your position run completely. See if your thesis is right or wrong. It's not about the money in this factor. It's about being right or wrong. I don't want to base it completely off of right or wrong, because obviously we're all here to make money. But you guys need to be comfortable with your edge and your strategy, right? So you don't want to just trade just for the money. You know what I mean? You want to let the positions run. If it hits your take profit, that means that you did something correct and you were targeting the correct liquidity sweep or whatever you're targeting. You did it correctly. If it hits your stop loss, then obviously you can still hit your stop loss and be correct because you placed it there. And if you see a continuation lower and you're long, then obviously your stop loss was set perfectly. Why? Because if you got stopped here and it continues lower, you did an amazing job identifying the fact that that is a huge reversal point. All right, so that's pretty much it for my strategic list. Very short video. Try to keep it under 10 minutes. If you guys have any questions, obviously feel free to reach out. I'm going to be posting this screenshot all over my social medias, and then the YouTube video will have obviously more in depth if you guys made it to the end of the video. Thank you so much. Like, comment, subscribe if you guys don't mind. It just pushes out my content a little more. I'm not doing this for the money, guys. I'm just doing this for the truth, trying to help so many people. It's very hard, but I'm gonna stick with it, guys. All right. So thank you very much, and see you in the next video. All right.